Welcome to Fun with Annuities, where every single week I welcome a celebrity guest expert that can help you maximize Chapter 2 of your life. Listen, learn, laugh, and love every minute of the most unique financial podcast on the planet. Let's get to it. Welcome to Fun with Annuities. I'm your host, Stan, the Annuity Man, America's annuity agent. We have a repeat guest, celebrity guest host on with us today. You know, if you wake up in the morning, you say, you know what, I would really want a very straight shooting, smart, high IQ financial advisor person, but I also need them to be a fighter pilot in a previous life. There's only one person on the planet that fits that. And oh, by the way, he's like the go-to source for all the Bogle-Heads out there. His name is Rick Ferri. Rick, welcome back.
Thank you, Stan. Thank you for having me back.
Really looking forward to speaking with you. You know, I was thinking about you the other day with chaos happening. And in fact, today I had a call and somebody, wanted something very simple and to understand from a portfolio standpoint. I pointed them to your site like I do everyone else. And all the people that are listening to us on the major podcast platforms, welcome to you and all the people on the Fun with Annuities YouTube channel. You can see our faces interacting, but I'm going to have all of Rick's links and website and his core 4 portfolios out there, so you can link in and look at that. But you know, you definitely need to check out what he's done. He's a little bit like me from the standpoint we both like simplicity. And we both like to explain things in its cleanest terms so you understand it. You can make good decisions on your terms and your time frame. Rick, you just got back from the Bogle-Heads convention, I think you were at, and I'm dying to know what the sentiment was there from all of the smart people in the room, you leading the way. What happened?
It was a fabulous conference. We had 27 great speakers, everyone from Jason Zweig of the Wall Street Journal to Michelle Singletary from the Washington Post, Christine Benz from Morningstar. I mean, there was just a fantastic assortment of great speakers, everybody volunteering their time, nobody paid, to just educate investors and on financial planning matters as well. It wasn't just about investing. So we had a lot of different sessions and we had a lot of different speakers, and it was just a fabulous 3-day event.
Excellent. Bogle-Heads, for people that don't know, and you're under a rock somewhere, that comes from John Bogle, the founder of Vanguard, the low-cost mutual fund disruptor. I mean, he disrupted the industry 100%. And to this day, I think Rick does one of the best jobs of carrying that mantle of simplicity and low-cost investing onward. Can you explain to people the Bogle-Head environment that's out there? We get a lot of people from Bogle-Heads that contact us because they like people that shoot straight. That's what we do. But tell us about Bogle-Heads in general.
Well, it's a philosophy of finance, personal finance. There's different ways, and we'll just use investing. And what is the Bogle-Head philosophy on investing? It's keep it simple, keep it low cost, keep it low tax, use index funds when you can, because the performance of active funds that are trying to outperform the indices is not very good, and this is historically goes back 100 years. So everything is about low cost, low tax, simplicity. This is the philosophy of investing. It's the philosophy of the Bogle-Heads approach. Live below your means, care for others, and also help others. I mean, so the part of it is adopting the philosophy. It's sort of stepping into the church and then moving up in the pews as you begin to understand this, as you move along, and eventually, hopefully, joining the choir, telling others about it. So that's what it's about.
How do people become a Bogle-Head? I know there's forums there's Bogle-Head forums. I've actually spoken on a few via Zoom, etc. If someone's interested in learning more of that, you just described who they are, how do they get involved with that?
Well, the new site that we use is boglecenter.net, and we call it the center of the Bogle universe.
Okay.
So it's the website. boglecenter.net. And from there, you can get to all of our different channels. There's the Bogle-Heads.org forum, the Bogle-Heads wiki. We have a Bogle-Heads Facebook page, Bogle-Heads Twitter, Twitter Live, Bogle-Heads podcast, Bogle-Heads YouTube channel. We have the John C. Bogle archives, which are all of Jack Bogle's speeches and all of his writing. And I know I'm missing, we have the Bogle conferences, everything is video. So
podcast.
It goes on and on and on and on.
So
if you go to boglecenter.net, you're going to see all the different channels that you could go to, depending on how you want to get your information. And that's what we're doing. We also have Bogle local chapters where you can go locally if you're living near a big city and you can meet with people. Sure. They meet in restaurants, libraries, or whatever. So it's like a individual investor local chapter type conference that you can go to. They do those once a month. They also do them on Zoom. I mean, there's just all of this information. You can find it all under boglecenter.net, and including link to the forum, which you can ask questions and get answers. And again, it's all volunteers. Nobody gets paid anything. This has been going on for over 20 years. It's been growing into different avenues, and it's quite an organization. There are hundreds of thousands of people who belong to it, and it gets bigger every year, not only in the United States, but internationally.
And I'll have that link on Rick's page. We have a page for our celebrity guests, and we'll have links to his site, Rick's site, and also this Bogle, the boglecenter.net site as well. So you don't have to write all this down if you're driving down the road or on a treadmill somewhere. As you're walking around and people are trying to pick your brain, what was the sentiment you were getting in this? I mean, this was held kind of in volatile times. Look at the date of this podcast. What were people thinking, saying, or was it the calm Jack Bogle nature there?
Well, surprisingly, there wasn't a whole lot of discussion about, where the market is or was, and now where it is. Because 2 years ago, and we kind of explained this right at the beginning, we did this thing called Bogle-Head University, which was a 3-hour pre-conference for people who were new to the Bogle-Heads. It was all free. I talked about, 2 years ago, if you would have invested in the stock and bond market using a 60% stock, 40% bond portfolio, that you'd actually still be ahead from 2 years ago. Yeah. So even though the market went way, way up in 2021, everything went up from real estate to stocks to bonds to cryptocurrencies and non-fungible tokens. I mean, you name it. There was froth everywhere from tremendous amount of liquidity out there that had been dumped on the market from government stimulus and the Fed, that this year all that froth was blown off. So, people focusing on 2022 and saying, I lost a lot of money. But if I ask them, well, haven't you been investing since 2020? And they go, oh, yeah. I said, well, how have you been doing since 2020? Oh, yeah, I'm actually ahead. So the problem wasn't 2022. The problem was 2021. And everything just got out of control. Now, if you would have had the hindsight being 2020, if you would have known that, of course, you would have sold everything at the end of 2021. But, who knew that? You can't predict these things. You just don't know. So, we go forward from here. We have much higher interest rates, which is a good thing for retirees. And we have lower stock prices, which is a good thing for people who are accumulating for retirement. So nothing bad actually happened.
Nothing worries a fighter pilot because you're going 600 miles an hour and you're multitasking as you're doing that. But what for people, that the joke is, if you didn't hear the intro, Rick is an ex-fighter pilot. So I kid him all the time that he's a unicorn in the business. So nothing worries him. But when you wake up in the morning, Mr. Fighter Pilot Extraordinaire, is there some things that do concern you that you're keeping an eye on?
Yeah, I guess it's what concerns me, and I may go off topic. I apologize. Is
Please
the amount of people who need financial help, and they just need a little bit of advice. There's a lot of financial planners out there who want to manage your money. They want to sell you products, this and that. But there's not that many financial planners who just get paid for giving advice. And the people like me who that's what I do, and I'm not touting my services. There are others as well that just get paid for giving advice. We're swamped. I mean, we're overloaded. I've got a 1 year waiting list for people just to get a couple of hours with me. A 1 year waiting list, and the other advisors who are doing this hourly and helping people that need advice, as needed, they're completely swamped too. So we need more advisors who are willing to just give advice and get paid for the advice and not have any kind of a conflict of interest involved in it, or any kind of a financial incentive other than just getting paid by people. So I mean, what worries me is just not, people don't have access to a good advice, and because that's what does worry. It's what worried me for a long time, but it continues to worry me, especially now.
So it's an ongoing black swan event with you. Is the black swan is people just are getting bad advice. I mean, that's been kind of the problem in the financial services business for a long time, and I've been all through the gamut of that with Dean Witter, Morgan Stanley, Fan Weber, Dean Witter. I mean, I've been in the big buildings. I've been in World Trade Center too, worked there, done it all, and nothing seems to have changed.
No.
And I think, do you find frustration? I know the Bogle-Heads are a little bit different, but you're not talking 100% to them, obviously. Do you find the frustration in the markets and people feeling like it's not transparent enough or fair?
Well, I don't feel any different now than I did 35 years ago when I entered the business. No, I think that I'm not getting that feeling that things are unfair, that people are saying they're unfair. They're just trying to figure it out. That's all. They're trying to figure it all out. And they just need a little bit of help figuring it out, and with a little bit of direction and guidance, which again, getting back to the Bogle-Heads, you can get it for free. They'll figure it out. Read the right books, read the right blogs, go to the right places. I mean, you could figure it out. It's not hard, but it is a real source of frustration, anxiety for people, because they're just getting so much conflicting advice. And I do feel bad about that. Of course, Jack Bogle felt bad about that. That's why he started Vanguard and index funds and everything else, and tried to put this information out there for people. And it's just a ongoing thing that will go on for as long as I'm alive. And we're trying to pass the baton on to younger people to bring on more younger people to help explain these things. But that's the way I see things.
Jack Bogle's legacy, he would laugh if he saw that. I mean, his legacy is so cemented and growing, but he would have never dreamt of this, of what you guys have taken. Talk about taking the ball and sprinting with it. I mean, he would be so happy. He really would.
Well, we're trying, and it's not. I mean, it's great. I mean, there's a lot of people who are volunteering, a lot of people who are helping. We're trying to start our Bogle-Heads Fire community. Financial independence, retire early, and we've got young people in that community that want to do something there. So it's once you step into the church and you move up in the pews, when you're ready to join the choir, a lot of young people out there have a lot of great ideas on how to help spread the word. So that's part of what we're working on.
It's a community. I mean, I think people are looking for that, especially in the investment world. Sometimes you feel like you're on an island and people are attacking your island, trying to sell you something. And, it's one of those things. But one of the reasons I also wanted to have you on, obviously, is to pick your brain on what we just talked about. But you were just mentioned in an article about, and the title of the article jumped at me. And that's when I shot you an email. I was traveling. I was like, I'd like for you to comment on it. And the title of the article was, Why November 1st Might Be a Smart Retirement Date for Your Older Clients. Obviously, this was written kind of toward the investment advisor group. But I wanted you to dig into the listeners who are primarily consumers about what you're talking about. Why November 1st? And I know there's more to it, but I'll throw you the ball from there.
Okay, well, thank you. I had a few clients where I was looking at their defined benefit plan. And here they've been accumulating money in an account, or the company has been putting money away for them. And only maybe 15% of the companies out there have defined benefit plans now. So it's a narrow market. But they were looking at retiring early next year. And they sent me their information about what their benefit would be if they took a lump sum distribution
Right.
versus doing an annuity, versus
Mhm.
doing the pension. And my first question to them was, well, when does this lump sum value change? Because the company will revalue these lump sum distributions once a year. Normally, it happens in November, December of each year, where they use the current prevailing interest rates that are set by the IRS to do this, to determine what your lump sum is. So they take the annuity that you were going to be getting, and I'm not an expert on this, so I want to make that as a caveat. So let's say that you were going to get $1,500 a month as a pension. That may have been worth, I don't know, $300,000 as a lump sum in 2021. But in 2022, at the end of the year, going into 2023, you'll still get $1,500 a month. But if you take the lump sum, it's not worth $300,000 anymore. It's only worth $200,000.
Mm-hmm.
And there's a switch. It changes. It just flips. And when does this thing flip from $300,000 to $200,000? It's based on your plan document and when the assets are revalued. And my question to the clients that had this, and I had 2 clients who had this situation in the last few months, you need to go to the employer and you need to find out, when does that switch? When does it drop? Because as interest rates go up, the value of the lump sum goes down because a smaller amount is needed to produce that type of $1,500 a month. And as Stan, the annuity man, I mean, you can explain this very, very well to the listeners.
And we do these pension comparisons all the time where people will say, well, this is what they're offering. Can you run the SPIA comparison quote, which we do an apples to apples quote. Typically 80% of the time the company beats the street. But what we're finding now recently is they are not beating the street.
Correct.
The street is beating them. And then you have to make that decision.
Correct.
Primarily, the biggest decision, as you know, is do you need income? And if the answer is no, then take the lump sum and invest
take the lump sum. And if you wanted the annuity, then go out and
talk
to Stan, the annuity man, and get yourself a good annuity through a good company.
Yeah. So go backwards.
And you can make more money.
Go backwards to the November 1st date and why it's set. I mean, we're both not experts on how these things are set up, but I see this all the time. I get calls where, hey, Stan's going to be $500,000 November 1st, but if I wait, it's going to be worth, $350,000.
Correct. That's about right. You get about a 30% haircut on the lump sum.
Yeah.
So think about it. So, I had both of these clients who were thinking about retiring January, February of 2023 because they wanted to wait because they were going to get a bonus. So my question to them was, how much is the bonus? And the bonus in one case was going to be about $50,000, but he was going to take a $150,000 haircut on his lump sum. So I said, hey, you need to talk to the company about this. And, the bonus is great, but you should probably retire. If it's true, you should probably retire by November 1st, or maybe by November 30th, whatever the company date is, before it flips and the value of your pension drops from 500 to 350, because you want the 500, and then you could go out and you could take that 500 and then you could annuitize it
if you wanted to. Sure.
Immediate annuity, and you're going to make a extra $1,000 a month. I mean, this is a lay down, or a lay up, or whatever you.
It's one depending on the sport. Now, one of the things that jumped out at me, and I'm reading the article, was the phrase minimum present value segment rate.
Yeah.
And I'm thinking to myself, that's fantastic. That has to be an IRS. That has to be an IRS thing.
It's a blend. It's a blend of the yield curve. It's a blend of short-term, intermediate term, long-term.
Explain that and why that's important for your client.
Again, I'm not an actuary. I'm not going to be able to.
We're not going to hold it to you. Can you do a 30,000 on what that is?
Sure. I mean, they have to come up with a rate of return where they're going to discount these annuity payments to you. So if your annuity payments are going to be $1,500 a month, they have to come up with a discount rate. And so it's just an interest rate. And if interest rates are very low, then that makes the lump sum high. And if interest rates are higher, which they are, it's been an unprecedented year,
Yes.
2022, where interest rates went way up. Now they're going to discount those payments by a higher interest rate, which makes the lump sum smaller. It makes the value of the bond, if you will, smaller.
Mhm.
So you need to know that. You need to know what it is now. You need to know what it's going to become. And if you're getting ready to retire in the next few months or so, you need to make a decision. And, you know, based on what bonus you may or may not get, and based on what kind of a pension it is, because there are different companies that have different types of defined benefit plans, you need to understand all of this and make an informed decision about your retirement date, and then taking the larger lump sum and doing something smart with it. You might just roll it into an IRA
Sure.
and put it in stocks, or you might annuitize it.
Sure.
And get a higher payment, but you just need to be informed. And I'm not sure if the companies are telling anybody this because they really don't want them to take the larger amount of the lump sum.
Yeah, the
So,
education level of that is really, really poor. I thought one of the best things that you pointed out in the article, which is it's a no-brainer if you think about it, but people don't do it, is get to know your HR people, get to know the
yes,
plan administrator, get to know the plan. Spend some time on learning about this thing that has been accumulating all these years and get to know it, because you're getting ready to make a decision. And as they say in golf, there's no mulligans in retirement. You're going to make a good decision here. So I think Rick's correct. Get to know that your employer's HR department, and then find out the administrator of the plan. Try to locate a person that can explain it to you simply on what your choices are, and then have them provide backup information in writing so you can see it.
And do it next week. This is an option expiration here. I mean, this is going to go away very quickly. So
Yes.
you need, if this is you, if you're one of those 15 percenters and you're going to be, who gets a defined benefit plan and you're going to be retiring or thinking of retiring, now is the time. Now.
I agree with that. Let's pivot away from that. I think that's important, and I wanted you to address that. But it really comes down to you've got this money that's been accumulated. Get serious about it. Get serious about your money, and find out what the rules are, and then play by the rules. But you got to know the rules, and it's a time urgent situation in most cases. November 1st is coming upon us. Obviously, this is releasing way before that, but
Yeah.
that's a good thing. Maybe it'll give some people a heads up. I know at the time of this taping, markets are gyrating. They're always gyrating, but it does seem like we do have a lot of external factors.
Sure.
Wars, pending wars, interest rates, etc. From your fighter pilot view, 30,000 feet, I know things are happening all the time. You can look back historically. What seems to be different about this time, or is there such a thing as different?
I guess a $31 trillion federal deficit is different.
Correct. Well, and that's low in a lot of people's calculations. I think that's that. I mean, that's a big number.
GDP, but anyway, it's difficult to swallow, because what's going on now? We've been borrowing money at very low interest rates for a long time. So the cost to us taxpayers for interest on this loan that's been building and building and building, the interest cost has been going down. I mean, the interest rates have been going down for 40 years.
Sure.
So it's really hidden what $31 trillion really is. Well, now what's going on? Well, now we have higher interest rates. Treasuries, as they come due, are refinanced at higher interest rates. That cost of borrowing is going to go up. It's going to bite more and more and more into our federal budget. This is what's new. This is something that our politicians in Washington will have to address, and it's not going to be pretty. It isn't. And hopefully compromises can be made, but I mean, it's difficult to see that. And I'm concerned about that. I mean, empires don't last forever, and debt is usually what brings them down.
Yeah.
And we're, I don't know how high the federal deficit can go before this interest payment starts to overwhelm everything else we do as a country. But there is some point of no return, and hopefully we don't get there. Hopefully our leaders in Washington make the right decisions that don't get us there. So that's my concern.
And that is a big one. And that is something that I get questions on as well. And of course, there's no perfect answers, right? They're gonna it's got the poop is going to hit the fan eventually, as they say in the South.
It's funny. I remember when I was in college, it was during the 1970s, and we didn't have a federal deficit. I mean, and this all occurred during our lifetime.
I know.
And it was just, during my working years. And at the same time, interest rates are coming down, and the value of stocks are going up and going up. And it's a wonderful world, right? As the government spends all this money. Well, there's a day of reckoning that's coming. And it's not going to be a single day. It's going to be, I think, a lot of slow pain. We had some fast pain here in the last, 2022. We've seen some fast pain, but I don't see any kind of a V-shaped
Define slow
recovery
pain.
here.
Define slow pain from Rick Ferri's point of view.
A long time of not very great returns in the stock market, companies struggling to grow earnings because they're being overwhelmed with labor costs and increased taxes. The government now is going to tax stock buybacks. It used to be government, stock companies can buy back their own stock. Now they're going to have a 1% tax on that, and that's just the beginning. I mean, we know where income taxes began. They began at like 1%, and now see where they are. So it's going to be a lot of slow pain, and it's just going to feel a whole lot more like the 1970s than the roaring 1990s or 1980s. And I think that's just the way it's going to be for a while, and we have to get used to that.
And you're seeing that slow pain unwinding in the real estate market, the car market, where you have to borrow money to buy. It's getting tough out there for these sectors. I'm assuming that you think recession is on the way if we're not already there.
I don't know. I don't know that.
What is your thought on that?
I will say something optimistic about.
Yeah, what is your thought on that?
Well, certainly we're much better off here in the United States than they are in Europe, where they've got all kinds of energy problems, which is just driving energy prices up 5 times which they were a year ago. They have real problems there, and they can't raise interest rates because the European Central Bank, it's not just one country, it's many different countries. And if you raise interest rates, you're going to really hurt countries like Italy, and they're already being hurt. So unlike the United States, where we're dealing with 50 different states, it's a little different. We can raise interest rates very rapidly here, and we can try to slow down our economy so that inflation doesn't really get out of control. But in Europe, it's a much more difficult task. So, and on top of that, there are energy issues where they're energy dependent, and we are energy independent. We are so fortunate in this country to be energy independent. Now, I know that people don't like fossil fuels and all that, but the fact is, we are where we are, and it's a good thing for us. Plus, we have full employment.
Right.
Okay, well, I mean, it's really hard to see people stop spending during full employment. They do continue to spend. So we may not see a recession or a deep recession. I don't know that. I mean, of course, that's the question everybody is asking in the stock market and the bond market is, what's the probability of recession in the United States? Because 70% of our GDP is spending, consumer spending, right here within our own country. So it's really important. But I don't know if there is a recession, or it does look like things are going to turn and we are going to have a recession here in this country, then the stock market may take another leg down. If there isn't going to be one, we could be at the bottom. We could be, and this is a good valuation for buying stocks in the long run. I mean, we're at reasonable PEs.
Sure.
And I think I'm not hesitant at all to say, let's put some money to work here in the stock market. You should continue to do your dollar cost averaging. Don't be afraid of investing for the long term at these interest rates and at this stock market valuation.
Well, and the great thing about this country and companies in general is they adapt and they figure it out. They're not just going to sit there and get hammered. They're going to figure something out to make it happen, which is all good. In a perfect world that I live in, Rick, and you know I live in that perfect world, where the unicorns chase and catch the butterflies, all fighter pilots, land perfectly on boats. But in that perfect world, Rick, Rick Ferri is the chairman of the Federal Reserve. And yeah, he
I don't know
is.
about that.
No, he is. And so what I'm asking you, Chairman Ferri, is what are you doing here?
I'm gonna shock the system. I'm shocking the system.
Tell me what that means.
I'm gonna raise interest rates really fast, really hard. I'm gonna give a lot of fast pain to this economy really quickly. A Volcker moment, if you will. Why?
Volcker with the Band-Aid rip. You're ripping the Band-Aid off is what you're saying.
Ripping the Band-Aid off. A lot of fast pain. Need it. Need it. Got to get interest rates back up. We're going to have a chance. The retirees have to be getting 4% on their fixed income. The price to earnings ratio of the stock market has to come below 20. There has to be growth in earnings down the road, in GDP growth. So in order to get there, it's a rip the Band-Aid off moment. And we've had that, and we may have that through the rest of this year. And then it probably will stop next year to pause and see, where are we? What has this done? What has it done? What has it done? Oh my gosh, money has been flowing to this country like there's no tomorrow. I mean, the dollar has just rallied to like its highest point because we've ripped the Band-Aid off. We raised interest rates much more aggressively than other countries, and we're providing the value. Other countries are sending their money here. People want to hold dollars. Now that hurts us for exports, particularly technology companies, which do a lot of their revenues overseas. It's hurting them. It's going to hurt their earnings. But other parts of this stock market should do well. I mean, the energy companies, materials, and so forth. We should see that segment of the market, which has done so poorly for so long, come around, and it has come around. And international stocks, which are very low valuations relative to historic. They're also in industries that would come around. So as we buy more materials and so forth from emerging markets and other countries because they're cheap, because the dollar is strong, that should help emerging markets as well. So you might see a rally in value stocks. You might see a long rally in international stocks eventually. I don't know. I mean, I'm just guessing, and I'm not trying to make any market timing plays here, but that's just what my crystal ball is showing.
I like you as the Fed chairman. I mean, you wouldn't. I mean, it would be kind of fun to watch it because, as the media would come at you, I believe you'd destroy them verbally and factually, which would be fun to watch instead of acquiescing to them as we see these pseudo politician people in place. But they have I mean, everybody's an armchair quarterback, and hindsight's 2020 on this whole thing, and we can all point back to Paul Volcker and what he did, etc. But these are weird times. It's like you said, the 30,000. I might quote you on this. The 30,000-foot view is the 31 trillion in debt.
Correct. That's the problem, right? That's the issue. It's yes, we can do all of this with the Federal Reserve. There are supply chain issues and so forth that might keep inflation up that are different than labor supply issues where we've got low unemployment right now. You could do something about the low unemployment. You could stop companies from hiring. You could slow things down, but that's not going to fix the supply chain issues, which is causing inflation. And this includes, the war in the Ukraine. I mean, we can't fix that. So, we have to kind of go along with it. But, I think we're doing the right thing. I think the Federal Reserve is doing the right thing. I understand what they're doing. It's not an easy job. It's a thankless job. I don't know. I don't want to be the Federal Reserve chairman. But it's tough because when they moved the Fed to Washington, I think in the 1930s, it did start to become politicized, and some presidents want to politicize it more than others. And I think that they've got a tough job. I think they're doing a good job, but they don't have the crystal ball either. And there's a long lag time before actions that they take and what actually happens, and they miss it a lot. I mean, they overstimulate, or they understimulated and they over tighten. I mean, they say they're always behind. Well, yeah, because you can't tell in real time what the economy is actually doing. So it's a very difficult job. But I think they are doing the right thing right now.
If Jack Bogle, if he was alive, boy, it'd be great, because a lot of us have modeled our businesses around his simplistic approach. I know we have. What would Jack say about crypto?
Well, he would say it's he talked about ETFs were like giving matches and gasoline to an arsonist, right? And I think that he would have something even stronger to say about crypto. Yeah.
Oh man, that's funny. I don't think he would be a fan. I think he'd kind of be in the Buffett crowd, where Buffett said recently, I wouldn't give $25 for the whole lot of it. I think that's a little extreme, but I was wondering, just because that's a different item on the table as compared to past market cycles that we're in. I mean, there wasn't a crypto space. Is it affecting the markets at all, or is it such a small space? And it really is a small space when you look at it.
Hmm.
Is it just a blip and just kind of a shiny thing at this point?
Well, the funny thing about, call it, let's take Bitcoin, for example.
Yeah.
In many cases, I don't even need to look at the S&P futures to know what the S&P futures are. Let's say overnight, for example. All I got to do is look at Bitcoin. It seems to be the risk-on, risk-off trade is, including Bitcoin now. So,
Interesting.
I wake up in the morning and I look at the price of Bitcoin and it's up 2 or 3%.
Mm-hmm.
Probably S&P futures are up 2 or 3% because it's all, risk-on, risk-off. And so crypto is kind of the, you could. It's not a stable source of exchange or anything like that.
No,
That's not what
and
it
it's
is.
It's not non-correlated either.
No.
It's
got to be
correlated.
very highly correlated with
Correct.
all the other risky assets. That's my point.
Right.
That's my point. It's like, well, it's being traded. It has a value, and unlike other people, I believe Bitcoin does have a value because you had to spend money to mine this. I mean, you had to put your dollars into your chips and computers and electricity and everything else. I mean, and you were paid for figuring out the algorithm on that particular block in the blockchain, and you got paid in, a cryptocurrency for that. So there is a value to Bitcoin, but it's just interesting on the day-to-day to watch the price of Bitcoin,
no doubt,
going up and down with all the other risky assets. And I don't know if it's going to be a factor for a long time. I think that cyber currencies will eventually become a factor, but how many companies are trading or allowing you to pay your utility bills your car payment with Bitcoin? I don't know, maybe there is one or two now, but it's not embedded in our economy yet.
It's early, and I always remind people when the internet first came about, and me and you were around then, so we can comment on it. There were companies called MySpace and AOL.com that were the leaders. And I know people still have AOL. When I see AOL.com email address, I kind of know who you are. You were at the start of this thing. Yeah. But I always tell people it's probably not going to be the names that are there that are going to be the final versions of what it will be accepted. I do think the governments will be involved heavily because it will give them the opportunity to tax real time, which is always fun. But we'll just kind of see. Let's kind of close it up as I always do. I'm going to ask you the question, the mic drop question, because Rick, you're going to be able to give the speech and the walk away moment, just like you did to all of your fighter pilots as you were getting ready to fly off. You said this great thing, but you're saying it now to consumers across the country that need advice, sage advice, and financial advice, and common sense advice. So I'm going to count you down in 5, 4, 3, 2, 1. Go.
Yeah, come up with a sensible plan, implement it, keep your costs down, keep your taxes down, stay the course, and you'll be fine. And that's it. Don't worry about the day-to-day fluctuations. They've always been there. They're always going to be there. and you need to just look through to the other side.
And try to stick the landing if you can.
Hey,
All right.
what we used to say is any airplane that you get out of meant there was a safe landing at some point prior to that. You know, as long as you can get out of the airplane, it's a safe landing, right?
That's
a good landing. Any good landing is one where I walk away from the airplane or something along those lines.
When you get out of the plane and people salute you and you walk off, great. We
Right.
won. Exactly.
Yeah.
Rick Ferri, just an absolute rock star, fighter pilot, Bogle-Head leader, just everything. And now choir leader, as I will say now, he's the leader of the choir. But really appreciate you being on, and certainly would love to have you back on in these times, because people need to hear this kind of sage, calm fighter pilot type advice where you're just everything's calm, stay calm, and with good advice behind it. Once again, we'll have all of Rick's links on the site, but I want to thank everybody on all the major podcast platforms for joining us, and thank you for looking at us on the YouTube channel. If you're watching us in our faces, Rick's the good looking one, by the way. I'm the one with the hat, and I will see you next time.